The yield curve inversion is the most reliable indicator of recession to date. While it doesn't give you a trigger, a motivation of any potential failure point, it is simply a warning of what's to come. Jim Bear Stearns Kramer doesn't agree, but the bond market doesn't appear to give a damn. Trade issues are mounting, and this is putting further pressure downward on the economy, which has been weak despite maximum stimulus. Not a good sign. You came here for the truth, so let me unveil that for you. Today we're going to talk about what's happening in the markets. I'm going to show you what's going on in the economy. I have a lot of detail to get into, so let's begin right away. Here you can see the markets on the right hand side. You're looking at the S&P, NASDAQ, and the Dow Jones all in the red. Now, even though it's a Friday, you can see that the plunge protection team came into work. The only problem was that they wanted to leave a bit early. Seems like there was that downward pressure. So let's take a look at this with a highlighter. We watched the market being pushed down from the open up until about 12 o'clock. Then the plunge protection team was activated. Looks like they came in for the afternoon shift and they pushed this up. However, they went on early break and decided that it would be time Friday at 3:30 to check out, and then the market pressure continued downward. This looks to me like clear manipulation, but it's up to you what you want to believe. I just look at it for what it is, and we can see that if there's weakness there in the morning, the weakness should be there all throughout. However, this doesn't really respond to that. This doesn't really show that. And so we have more and more dislocations, whether it's caused by the plunge protection team, by the central banks, by any of the other players that are out there. This is not a good thing because it's really causing chaos ultimately. You can look at the technical analysis, you can look at the fundamentals, you can see the geopolitical factors. Everything here is really creating this perfect storm. One of the most important sides of this is the yield curve inversion. The yield curve everyone's worried about is inches away from flashing a recession signal. Extremely important to follow the yield curve. It has been basically all throughout each level right across here. The treasury yield curve sloping even more down, threatening to send the 10-year rates below 2-year rates. An inversion of the 2 and the 10-year has preceded every recession over the past 40 years. Now, when you have this, as soon as it crosses that line, does that mean that there is going to be a crash tomorrow morning? Of course not. What it does is it sends a warning signal that in the near future, we're going to have big problems. This right here is just showing you the 10-year, 2-year, and of course it has been declining just barely keeping itself above water. Very soon, this will be down below 0%, and of course, just like everything else, falling into the negative, falling in line with the remainder. Look at how many times the exact same thing persists. We watch these markets fall down, a recession happens, and nobody expected it to occur. We thought everything was fine. It was this, it was that person's fault. We're going to point at those people over there, that group over here, and nobody is ever going to acknowledge the fact that these are cycles that repeat over and over again. Nobody ever wants to be the one to say, look, it's happening right now. Can we just slow this down? Can we stop fanning the flames? Can we stop pouring gasoline on this fire? No, you can't. You're a party pooper. The 3-month, 10 years doing the same thing. It has actually inverted already. And of course, in the previous 2 instances, as you can see on this chart, the same exact thing occurs. It falls into the negative, yield curve inverts, and we have a recession that comes afterwards. Could be 6 months, could be a year, could be 18 months. You tell me when it's going to come. I don't know. All I'm saying is that this does occur every so often, and there's no way around it. You cannot prevent it. You cannot extend the cycle. If they wanted to extend the cycle, they could do it forever and ever, but of course they don't. Everything must revert to the mean, not to the meme. And for those long-standing GPS subscribers, you're going to know exactly what I'm talking about there. Anyway, look at the effective Fed funds rate at the same level as the 30-year Treasury yield. You know something is screwed up when that's the case. Of course, it actually dipped below and it's going to go lower. It has to based on the trajectory here. Looking at the 30-year Treasury, this has become one investment that we have watched growing and growing. Why? simply because there is no yield anywhere in the world right now. You cannot get yield without taking risk. You have to take extreme risk just to get small amount of yield, that's for sure. And this goes for Europe. If you look at it, it is actually netting you less than the United States in many cases. Here's a 30-year yield just showing you further back going into the 90s up until today. We've watched all of these rates coming down, whether it's the Fed funds rate or whether it's anything connected in with that. Globally, we have watched this become an easier and easier policy, and that's not just something in the last cycle, okay? If you want to look much, much further, you will see the result of their actions. They always screw it up, and they always create the problem and only make matters worse. Jim Cramer, action in the bond market does not mean a recession is around the corner. Well, if Jim Cramer said it, I guess he's totally right, and I am completely wrong about that. Just because it has preceded the last several recessions, and it's a perfect indicator in that respect, don't worry about it. That's not the case. Jim Cramer said, don't panic. Jim Cramer said, buy Bear Stearns. Normally, when you see this kind of action in bonds, it means a recession is right around the corner, but I think that's a profound misreading of the current situation. Wait a second. So he acknowledges that in other instances, it would be the case. It would be a recession, but this time is different. Can you believe that? This time is different. My goodness, how people, when they're in the middle of it, they can't see around them. It's as if they're blindfolded to reality. Why? All you got to do is take the sunglasses off, take the shades off, get woke. 20-year mortgages hit zero for the first time in Danish rate history. The problem that you're seeing today is all central banks, all governments around the world. If you look in Denmark, they are an extreme example, actually trying to destroy their country's currency and the financial system surrounding it. This is just showing you the Danish 10-year government yield, and it has been going down for a little while now. It's no different than what all of these other banks are doing. They are all trying to bring this down as low as possible, but where does it stop? Are they going to bring it down to minus 5%, minus 10%, 20, 50%? Well, you know, this is not the same way as increasing rates. You can only bring them down so far and they have any effect at all. In fact, if you look at those central banks out there that have done negative interest rates, they have brought them down just barely below the zero, and the effect of which, in my opinion, has not been good. It has not actually done what they say it would do, particularly looking at the ECB. They promised that they would be able to fix this, and still 10 years out, they are trying to fix the problem. It doesn't really look good for them, but of course, this is a problem that needs to be resolved by an economic detox, and of course, that never will be allowed to occur. These two banks, Commerzbank as well as Deutsche Bank, have been absolutely bleeding out, hemorrhaging since the financial crisis. There has been no resolution. There has been no fix for either of these banks that are doing so terribly. They tried to stick them together as if putting two zombies together is going to create some living creature. It doesn't work like that. They are both finished. These two companies here are bigger than what any country could ever bail out. Never mind Germany, never mind Europe. We are watching this actually unfolding before our very eyes, but because it occurs so slowly, because the details are so minute, people don't pay attention. Look, Deutsche Bank just got rid of 18,000 people, or at least they've scheduled to get rid of 18,000 people, and nobody even talks about it anymore. It's as if nothing happened. Look, market's fine, everything's up, let's just buy 7 shares of Amazon and so on, but that can't be the way that people actually deal with their problems today. They are being complacent intentionally. They're avoiding it, and the market will whipsaw back and forth in the next crisis. This is what it comes down to. The balance sheets of major central banks, the Fed, ECB, BOJ, the PBOC, okay? All of these central banks here have 5 trillion, and in the case of the Federal Reserve, I think it's about 3.8 trillion at this time. This is astronomical. They have never gone to this point. They created more money since the financial crisis up until today than had ever been created in history before, and everybody knows about that. Now, the central bank themselves, they are trying trying to print themselves out of a disaster and actually putting themselves further into the hole. They are actually creating the crisis, and they're doing so intentionally. When you look at it on a deeper level, their actions are not misguided. They are not ignorant. They know what's going to occur, and they are doing it very, very well. Create the crisis, provide the solution. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these 2 books have everything you need from top to bottom, A to Z. All the details are located here. You can get the audiobook at themoneygps.com. If you want to know what's going on in the financial system, in the economy, I have video after video. This one here in particular, you should definitely watch. Click on it and I will see you there.